Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the ES unfolded yesterday as an example of how correct position sizing can help keep your losses small and your profits large. Here's a 3-minute chart of the ES yesterday. If I look at our STF, we had basically a down day yesterday with the STF black or grey here, and we actually had two sell setups. Both these sell setups were in the direction of the large degree trend. In fact, actually, if I go to the higher time frame chart, which I do for more experienced users, if we come out and place the DP on from the prior swing high, which would have been this high of the day on the 12th, place the DP on there, you can see that the 15-minute chart went through it but then snapped straight back again after it. So in other words, we had a reversal here, therefore the large degree trend was down. If I place the DP off this last pivot low here, whoops, sorry, missed on the mouse there, sorry about that. There we go. You can see the large degree trend would be down, and it would actually be down into this low, pretty much at the low of the day, so the large degree trend down. And also we had a TS1 sell about midday, which I'll look at in a minute. So now if we go to the 3-minute chart, we can see how that fits in, where in particular that's our 15-minute high, large degree trend down into our large degree support zone down there. So both these sell setups are in the direction of the large degree trend. But that's not what I wanted to talk about today. I wanted to talk about how to keep your losses small and your profits large, and this is by using correct position sizing. Let's place our analysis on our first trade setup here, and you can see that we use what's called position sizing. In other words, we vary the number of lots, contracts or shares based on a fixed percentage of our trading account. In this case, it's risking 2% of a sample $20,000 US. So that means based on your initial entry and your stop level, you could short 4 contracts here to keep your initial risk less than $400 US or less than 2% of $20,000 account. Now this trade actually went down, it almost got to the first target. So with a profit of almost 2R there, you'd have probably brought your stop to break even. So actually in reality this would have been actually a break even trade or no loss. But let's say that you didn't. Let's say you were stopped out from -1R loss. In other words, this kept you at a small loss, or what I call one risk unit. Let's have a look at the next trade setup, which came in here, this TS3 sell. We then place the analysis on here. Again, we risk less than 2% of a sample $20,000 account. Again, this would mean trading 4 contracts for a risk of $350. This time the market went down to the first target and actually came out pretty much the low of the day. If I zoom out, what a great place to bank your profit within a couple of ticks of the low of the day. But the point being is that this profit was much larger than any loss we'd have had earlier. So this would have been a profit of plus 3.6R, or 3.6 times greater than initial risk. So even if we'd made a losing trade off our first TS2 sell, that would have been -1R. Then you do plus 3.6R, that means you'd have been plus 2.6R overall for the day. And this is the mistake most amateur traders make, is that they want to have more profits than losses because they think that's the way to make money. But because they do that, they tend to have small profits and big losses, which actually ends up draining their account over time. So it's much better that when you have a losing trade, let's say for example here, the loss is kept small at one risk unit, then when you have a profitable trade, the profit is much larger. Oops, sorry, I keep missing that. Just clear that off and start again, zoom out a bit. I need to be over the red cell bar, that one there. There's the analysis, that's great. So in other words, in this example, this profit was 3.6R, so much bigger than any losing trade earlier. So that's what correct position sizing does and why it helps you in your trading, because it allows you to keep your losses small and your profits large. And this is built into MTPredictor as a fundamental part of the way we actually do our trade analysis and our risk control within the software. But as I said earlier, in reality, because this particular trade was almost to the profit target here, within a couple of ticks of the profit target, in reality you'd have actually brought your stop to break even. So this would have been a break even trade or no loss, and therefore the only profit for the day would have been this one here. So most MTPredictor users would have ended up with plus 3.6 hour profit on the day there yesterday. So a good example of showing how MTPredictor can keep your losses small and your profits large by using correct position sizing.